What's up, everybody? Welcome to the life cycle of a trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we're going to cover a jade lizard. One sector that's just gotten whacked over the last month or so are the airlines. But looking at Delta Airlines here, so Delta, it's now trading at $46. This was almost $70 a month and change ago. So the stock has taken a 40-50% downside move here. One trade we haven't done a ton of yet is the jade lizard. The jade lizard consists of a naked put along with a call spread where you collect a net credit that covers the full call spread to the upside. So if the stock does have a big move to the upside, you have no risk to the upside. It's a very high probability trade. It's a neutral / bullish trade that benefits most from a sideways move, but you have no risk to the upside, which is a interesting part to the trade. So typically when we set these up, we look at around a 30 delta for the short option. Now with the move that we've seen in Delta, there's only $5 wide strikes to the downside, so we're kind of limited. And to be completely honest, I'd rather lean a little bit heavier on the Delta, just given the move that we've had. The stock down 40-50%, I want to lean a little bit heavier Delta long than neutral or even short here. So I'm going to go to this 45 strike put here. It's a 40 Delta on the dot here. So when we're doing the call spread, here, I would want to be like $2.50 wide because I want to collect a credit that is greater than the width of the strikes. And just looking at the premium here, it's tough to go past this 50 strike just because, I don't want to sell a 50 or 60 cent call spread. I'd rather sell the 70, 80 cent call spread. You certainly could go to this 52.5. The 52.5, this spread trades at, roughly 60 cents. Ish. It's kind of a cheap one. I would really rather do this as like a $5 wide spread, but you don't collect enough credit here to cover the full width and make this really a true jade lizard. So I'm going to do the 50 strike just to give you an idea of what this looks like on the curve view. And I'm going to the 58-day, the May expiration, just to give us a little bit more time. We're kind of in that weird middle zone between April monthly expiration, the May monthly expiration. You can really go to either one. I'm going to choose May just to give myself a little bit more time. So here we're looking at the spread. You can see there's no risk to the upside. If we do get this tail sort of move to the upside, I would have $1 above the width of the call spread. So the call spread is $2.50 wide. I'm selling this at $3.50. So all else equal, if the stock is at 65 at expiration, this put would be worthless. This call spread would trade at $2.50, which would net me $1 in possible profit to the upside. My break even here with the $3.60 credit is going to be down at 42-ish, not quite the 52-week low, but significantly lower than where we're trading at right now, $4 or $5 lower here. So I think this sets up as an interesting trade. You got an IV rank of 64 as well. That also plays into our favor. So let's try and get that 350 that we saw marked just a minute ago. And we can adjust from here, and you can adjust from the analysis mode, which is really nice. So let's do the 345. 345 there. So you see I got filled above the mid price there just due to some of the wider bid-ask spreads here on some of the options, but not too bad of a liquidity here. So the trade we put on the 19th, which was just a week ago, in the middle of last week, a couple of things have worked in our favor here. If we go to the market snapshot here, if you right-click on the order chains feature, which gives you this, you can click on the view market snapshots here. We could look at implied volatility, which was at about 58%. We'll look at that in a second. The underlying price when we put this trade on was 46.50. The stock is now at 49. So we've had a little bit of a rally. When we look at the IV rank was just about 67. We're now down to 48. So it's come in significantly. And what you'll see when we look at this IV index, the actual implied volatility of this expiration, when we put the trade on, if you hover over, you can see the exact number, 58.1%. When we go back to the trade page, the table, you can see we're at 45%. So volatility, actual implied volatility, has come in about 13 points, which is a huge amount of volatility contraction. So that, coupled with the move in the stock, has led us to some profits. Let's take a look at kind of where those profits came from. So we're marked at about a $97 profit here. This put that we sold at $2.72 is now trading at $1.48-ish. So we've made about $130 in value off of that put. Now the call spread, because the stock has rallied, is obviously going to lose some value, but because of that volatility contraction, it's been so minimal. So when we looked at that put, the put being $2.72 at entry, just middle of last week, it's now trading at $1.48. So we'll just round that to $1.25 in value. That means that this call spread, which is now significantly closer to at the money, the stock has rallied about 4 or 5%, has only cost us about 20 or 30 cents in profit, and that's because volatility has contracted so significantly. Of course, this spread is still out of the money, so if we were to hold this position through expiration, this would actually be an even more profitable trade because this call spread would have no value. But we're not going to do that because this position has moved so fast in our favor, no point in holding it. So we're going to route a closing order here just to take the money and run on a nice little trade that came in very quickly. You'll also see here, this will free up some capital. So if you are capital constrained, cycling out of positions like this allows you to get into new higher volatility trades or even new directional trades in the same underlying or other. So we're just going to route this order. Let's see if we get filled here at 250 and just get this one off the books here. No fill there. Move this to 252. There we go. We got filled at $2.52 debit. That nets us out a $93 profit over about a week, using about $700 in buying power. A nice little return on capital in just a couple days, 10-15% when you do those numbers. So nice trade, good vol crush, and a directional move in our favor.